It feels, though, that increasingly that the policy coming out of Washington is really sort of coming into this intersection with the business of semiconductors. And we got this headline this week. You called off this deal with Tower Semiconductor, roughly $5 billion, because you couldn't get the approval from regulators. What does this mean for your ambition in building out the foundry business when you can't get the approval from China? I mean, this has clearly got to sort of hamper your ambitions.
Unfortunately, we weren't able to get approval for the Tower acquisition. And as I would say, it was simply caught in this, center of U.S., China, or the geopolitic going on. We're disappointed by that because being able to acquire a foundry company like Tower would have accelerated. My ambitions to be a foundry weren't dependent on the deal, but they would have been accelerated by it. So simply put, I have to find other ways to drive the agenda because it's not likely that any major technology acquisition will get regulatory approval. And I think that's disappointing because M&A has always been a factor in how technology companies have been, building and moving their strategies forward. And it's unfortunate, that that's become a consequence of the current geopolitical tensions. And for us, it will slow me down in some aspects, but my strategy is not dependent on getting this particular deal done. It would only be helped and accelerated by that. And we're going to find other ways to keep moving our strategy forward in light of that.
If M&A isn't in play because of the regulatory environment, what are the other ways?
Business partnerships, winning customers, building capabilities organically. But I do think that this consequence of the M&A no longer being available for companies, and this isn't an Intel statement, this is an industry statement, I think is an unfortunate consequence of the current geopolitical situation. And, part of the reason that we've advised, I'll say, balance and temperance on both sides. We need the U.S. and Chinese collaborating, discussing with each other. These are the two largest economies in the world. I've been to China twice. I'm the chair of the U.S. Chamber's China Center because we believe there needs to be this bridge between these two important economies of the world. And, I've personally stepped into that role to help to play some of that bridging role. Obviously, visits by the various cabinet members, Yellen and Blinken recently, Kerry, and I think Raimondo later this month. All of these, I believe, are very positive steps. Let's at least have the real conversations going on.
You alluded to the fact that, this is an industry that is global. And as we have seen the geopolitical side of this play out, we've learned that, whether it is in Europe, whether it is in Asia, whether it's in the U.S., if there are barriers that are being drawn up, does that ultimately hurt innovation in this space? You look at the U.S. The U.S. has excelled in the design of chips. Manufacturing may be in Asia, but the U.S. provides the machines that allow for that. We've seen that in Europe, too. What happens when those barriers start to go up because of geopolitics?
I do think that it has a negative implication on the innovative cycle for the world in that regard. And I think, like in areas of AI, we've seen that the U.S. has led, right, profoundly. So all the major AI innovations, despite some declaring that wouldn't be the case, even just a few years ago, right, that China was going to win in that race. Well, hasn't worked out to be the case. I believe fundamentally because of the open, innovative, somewhat chaotic cycle that we have and the very aggressive venture and entrepreneurial aspects that we bring to the table. And I think that's best served by largely open global markets. And, and I believe that history has demonstrated that time and time again, that that's the best way to, approach global policy for markets. Semiconductors are one of the largest export items for the American economy now. One of our largest exports to China, only number 2 to soybeans. This is big. This is important. And if we're going to be a global manufacturer at scale, we need access to global markets. We need to continue to invest in our long-term research. Another aspect of the CHIPS Act was those long-term research investments as well. So let's be ahead today. Let's plant the seed corn to be ahead tomorrow. And let's underpin it with manufacturing at scale.